Hello, everybody, and welcome. As we like to do every week, we like to take a look at the past week's market activity and then bounce around the market and look for something to trade. We'll put on your helmets for this one this week because it's going to be a pretty in-depth kind of look at the markets. I want to show you a couple things that you're obviously or probably not aware of, and then we'll make a trade based on that. So, if you've been following the markets at all, obviously you've seen it's been a pretty wild ride over the last couple weeks, specifically like the last 2 days of the week. These huge moves, which are obviously unexpected and throw kind of a wrench in our plans for what we're looking to do as far as trading. Generally speaking, when I see the market volatility as a whole rise, because this is the S&P 500, this is the market. We always look at the NASDAQ, the S&P 500, and the Russell, which is the small cap stocks, but they all look about the same as always. But generally speaking, when I see the market volatility going up, I'm going to look to trade in an index, because that means if the market is this volatile, individual stocks could be crazy. But that's going to be totally up to you as well as to what you want to trade. But again, that's the S&P 500. This is the NASDAQ. Again, they all look fairly similar. But here's what I want to show you. What we're going to do here is we're going to go back in time with this platform. I can go back a few days. And in this particular case, I'm going back the Thursday before the Friday because I want to show you something. And what this is showing us, and don't worry, you don't need to have this on your platform. This is just something I want you to see. We're volatility-based traders. What that generally means is we want the volatility to overstate what's really going to happen. Meaning, when I make a trade and the volatility says the market's going to move, let's say $10 either way, I'm hoping that it moves 5, right? Because that stays within my range. So let me just show you what I mean by that. So in this particular one on Thursday, what this is showing us is the market is predicting in one day, the next day, that it's going to go up or down around $6. This plus or minus 5.986 means it's expecting the range for tomorrow to be $12. $6 up, $6 down, a $12 range. So when we trade, we're hoping it stays within that $6, right? If we're making a trade assuming $6 is worst case scenario, up or down, then we want it to stay within that range. We're going to be winners. So if I go to the chart, so remember plus or minus $6. But if I go to Friday, which is right here, if I go there and go up here, this shows you the high and the low for the day. So what is the high? Roughly 370. The low, roughly 357, means it's $13 is the range. Now remember, we were expecting up or down 6, so we were expecting 12. Now I know it doesn't seem like much, but what we're hoping when we make trades is instead of 12, it's like 4, 5, 6, because it's expecting a wide range. If it stays within a range, we make money. So when the market goes outside of its expected range, we generally lose. So what can we do in these kind of situations? Because the market is obviously getting extremely volatile and things aren't doing what they're supposed to be doing as far as predictors, volatility-based predictors. I know this is pretty heavy talk. You might need to listen to this a few times. Well, what I like to do is I'm going to shrink the time of my trades because normally we're looking to make trades and have it stay in a range. But when this starts going way outside of ranges in small amounts of time, the only way I think to do to counteract that is to shorten our time frame. Usually we're looking for 45 days, duration over direction, but in this case the direction is so extreme, I'm going to look to hopefully shorten that time. And now what I'm forced to do is pick a direction, unfortunately, because obviously the Iron Condors in this little world don't look like they're going to work, at least for the short term. So what I'm going to do is make a cheaper trade, risk less, and really just pick a direction. And when you pick a direction, it's a 50-50 shot. But we're also going to look to manage this much quicker, meaning if things go our way, we're maybe not looking for a 50% profit. Maybe we can pull out 20% profit in a couple days because it moves so much so fast. And we only make money when it moves that quickly if it's a shorter time frame as well. So a little more risk because we're shortening the time frame, a little more risk because we're picking a direction, but we're going to look to manage these much quicker. We're not looking for 50% profits anymore. 10, 20, 30, something like that in a few days or a week, and we're happy to walk with a profit. So let's go to the trade page and I'll show you what I mean and how to set that up. So we're going to stick with the monthly expirations because they're more liquid. And again, normally I'd be down here, looking to close around 45 days. But as I've just explained, because the market is so volatile, I'm going to look to capitalize on movements much quicker, which means I'm going to look for around a 30-day kind of window. Now, could I go shorter? Absolutely. But when you get this short, like 1, 3, 5 days, then I got to be right away, right? If I pick 3 or 5 days, it's got to go up or down in that 3 or 5 day window, or I'm completely wrong. So 30 days is still a good number, because if it makes a big move, I can pull some profit out, not a ton, but it also gives me time to be wrong and hopefully correct it and be right on these big moves. So if I open this thing up, and I can just shrink this down because I'm going to make a really small trade. The stock price is 357, let's say. And you can see, unfortunately, the strikes are kind of weird on this month. They're $1 except for right around the at the money strike. So if I believe the stock market is going to go up drastically in the next week or two, then I would buy a call vertical. And again, we always buy an option just below the stock price, 357, and sell one just above it. In this case, it'd be 358. And as long as we're in the 45 to 55 cents per dollar width, that's a range, and we're much looser on buying verticals than selling. So this works out to obviously 56 cents per dollar. This is $2 wide. If you multiply 55 cents, which is our normal range, times 2, it gets you to 110, but that's fine. Like I said, we're much looser on verticals buying them than we are with selling them. Those rules are pretty hard and fast. So in this case, if I believe the stock market's going to go up, I'd buy this call vertical for around $1.10-ish or more, no problem. If I believe the other way, if I believe the stock price is going to go down, I would do the reverse. I'd buy a put vertical. And in this case, I do the opposite. I buy a put that's directly above the stock price, and I sell the put below the stock price. And again, we're looking around 45 to 55 cents per dollar width. So in this case, 45 cents times 2, which is $2 here, would be about 90 cents. We don't mind paying a little bit less. Again, buying verticals, we have a bit wider range. It's kind of up to us personally what we want to pay for the chance to win. But again, that's our risk. It's around 88 to 90 bucks on the put vertical. It's about 110 bucks on the call vertical. Totally your choice. In this kind of crazy market, we're going to have to pick a direction, keep our trading fairly small. Again, this is defined risk, and just hope to manage these much quicker. If we see a profit of 10, 20, 30% in the next week or two, we're just going to take it off. We're not going to hold on for that 50% that we like to do for most trades. And that is our trade for tomorrow in SPY. Hello everybody! First off, thank you so much for watching my videos. I always appreciate when people take the time to watch my videos and learn from me. But in the end, I've got a great opportunity for you, because really what this is all about is learning to generate an income stream. So all this knowledge is great, but until we put it into practice, what is the point of it all? At that point, it's just knowledge, but without putting it to practice, it's of no use to us. So I've come up with a way, I believe, to teach you how to generate an income stream with all this knowledge you're learning from me. So if you head on over to Sharper Trades, right there, sharpertrades.com, and you go to the products section, you'll see I have 2 alerts. They're the exact same alert. The only difference between the option and the pro is that this includes all my courses, unlimited access for as long as you're a member. But this is the one I want to get you up to date on, the alert. And what this is an alert I put out in real time, 2 to 3 times a week, real trades I do every morning, and also when I close them to maximize my profits. So I want to teach you how to generate another income stream, and I believe this is the best way. So if you go on over to sharpertrades.com and you type in this coupon code right here into the basic option alert, normally it's $49 a month, but because I'm so interested in getting you up and running as quickly and confidently as possible, if you go there now and type in that code, it's only $1 for the first month. So not 49 bucks, $1, and you can get onto my alert system and see if you like it and learn to start generating income today by just typing in this code. And again, you can cancel anytime. If you stick around for more than a month, obviously it'll go to $49 a month. But for $1 a month to learn how to generate an income stream, I believe that is a great opportunity. So hopefully you all jump on this and start learning to trade with me in real time, kind of right next to me as I trade on a daily basis. And for those that don't know, these are all my courses that I have up on Udemy. A lot of people don't know that these are a three-part course. This is part one, understand. Part two is the option strategies, and part three is make and manage profitable trades. So if you weren't familiar with that, this is a three-part series. Now you know. So if you're somewhere in the middle, or the beginning, or the end, you know where to start and where to finish. And of course, I have a couple other courses there. So head on over to Udemy and learn more, and then take all that knowledge and join my alert service and start learning how to turn that knowledge into income. Hope to see you soon.